Let me tell you a quick story that will give you a sense of why I'm doing this video. The story starts with a large lion, a genius gray wolf, and a dumb donkey all agreeing to go hunting together. After the hunt, they gathered a huge amount of food and had to decide how to divide it up. The large lion asked the dumb donkey to divide the food. The dumb donkey chose to divide the food portions equally. This made the large lion, the king of beasts, angry, and with his paw, he killed that dumb donkey. The large lion then asked the genius gray wolf to divide the food. The genius gray wolf wasted no time. He quickly gave a majority to the large lion, including the dead dumb donkey, and only kept a small portion for himself. As they consumed their portions of food, pleased and impressed by how the genius gray wolf divided up the food so, quote, fairly, the large lion, in between bites, asked the genius gray wolf, how did he come up with such a smart solution? Without a pause, the genius gray wolf said, and I quote, I learned from that dumbass. Did y'all catch that? The dumb donkey being the dumb, never mind. Thankfully, investing in precious metals is nothing like a life or death decision, but our ability to learn from the mistakes and misfortunes of others can make all the difference in the world. Making mistakes is a part of life, and it really acts like a headwind against us, slowing down our forward progress. However, learning from others can act like a tailwind, propelling us forward faster. As investors, the path towards these incredible gains is littered with bodies of failed investors, offering us important lessons that we can either learn from or repeat or even ignore. So let's spend a few moments together exploring the mistakes of others so that we can be more like the genius gray wolf and not the dumbass. Investing in metals, especially if you're a newbie, can be confusing, especially given the proliferation of bad information and misconceptions about investing in precious metals, which absolutely results in unrealistic expectations and disappointment, which leads me straight to mistake number one. You can make mistakes when buying gold and silver. I know it's hard to believe that trading worthless fiat paper into real money in the form of gold and silver or platinum could ever be a mistake. With the incredible variety of ways to invest in metals, it's easy to make purchases that don't make sense depending on your situation, your investment goals, or your investment timeline. You can buy physical metals, paper metals, ETFs based on the metals, or even mining stocks. And making it even more complicated, there are a variety of ways to invest within each of these purchase options. The most surefire way to make a mistake is by not developing a clear plan or approach, which considers your goals and risk tolerance. And of course, it always starts with your education. From there, we have mistake number two, which is failing to diversify in and outside of metals. A few months back, I did this video where I shared research that showed that 25 to 30% portfolio weights in metals was the optimal amount to maximize your returns and actually reduce the level of risk within your portfolio. Shout out to Jeffrey Christian and the CPM group for this chart, which provides a visual representation that highlights that sweet spot. I've also included some slides from my previous video, which also reinforces this point. The tendency for us as precious metals investors is to discount the importance of other investments because they are denominated in dollars. Regardless of how worthless we believe the dollar is or may become, it's still the top dog, and we just can't ignore that. Additionally, because each metal, gold, silver, and platinum, all perform differently and excel in different monetary and economic environments, we have to take into consideration the diversification there. For example, platinum loves high inflation. Silver offers potentially explosive growth at the end of bull markets, but doesn't do well in recessions, while gold provides steady and consistent value and growth under a majority of the market conditions. Being diversified within your physical metals offers opportunities as well as protection should you ever need to liquidate. The next mistake I see is number three, buying from too many LCSs and even buying too much online. I preach this over and over again, but your relationship with your LCS is the one that pays dividends over and over again. But you do have to invest your money by spending it with them, and more importantly, you have to invest your time by developing that relationship, as this almost always results in you receiving better pricing and access to items that they hold back for their special customers. Over on Discord, the guys are always reporting about how their LCS hooked them up with something simply because of that relationship. I routinely buy below market simply because my LCS has grown fond of me, but that was only after I spent time and money becoming a loyal customer. Not to mention, this relationship with your LCS will also pay dividends whenever you need to sell. While you may find better deals online from time to time, we are desperately in need of our LCSs, even if it costs us a little extra, because we need them in our communities, especially if we're going to keep the anonymity that comes with holding metals. which leads me to number 4. But before we do that, I want to make sure that I ask you to hit that like button for me if you're learning anything, if you're finding any value in this video, or you simply just want to show us some love. Also, I want to apologize for leaving you, for taking a week off while letting you know in advance. Just know life is great, but it's been crazy busy in a good way. And it's summertime, y'all, and the living is easy. That aside, I'm back like backbones, backyards, and back seats. But my schedule will be a little bit off during the summer as I have several trips planned to LA, Mexico, Minnesota, and a few other places. School is out and the good doc needs a little time to relax. Now on to mistake number 4, which is not utilizing or investing in ETFs. We all know physical silver can be extremely bulky and it carries a very large premium with it. And I know we preach if you don't hold it, you don't own it. And while that is true, we don't need to hold it in order to profit from it. We simply have to acknowledge that ETFs offer us the opportunity to have price exposure without the added cost of premiums or the hassle of storing. I know this is blasphemy in some circles, but ETFs do have a place and a purpose. For example, they can be particularly important when you think about how much an ounce of gold costs. With an ETF, you can easily invest $100 and have exposure to the gold price, while that same $100 would not get you very much physical gold, and the premium would be ridiculous. I want to be clear, you absolutely need to have a physical position, but don't sleep on ETFs and some of the benefits that they offer, particularly as it relates to price exposure. While the next 3 mistakes I have separated out, I do want you to see them kind of as very much interconnected. But number 5 is falling in love with metals. Some of you remember Eddie Murphy's SNL skit where he played Buckwheat character and he did this parody of a commercial, like it was a compilation album called Buckwheat Sings. And one of the songs was Eddie Rabbit's Looking for Love, which went like, "Looking for nub in all the wrong place." Okay, never mind, I'll stop singing. As precious metal investors, we have to resist this urge to fall in love with our metals. With the exceptions of gifts, there isn't a coin or a bar I wouldn't sell for the right price. I often hear people say things like, "I would never sell my metals." Are you crazy? I want you to fall in love with what your metals can do for you, not the metals themselves. Rick Rule talks about the importance of not taking what he calls a round trip with your precious metal investments. He warns against buying and holding and never selling, only to end up back where you started.
Remember too, which we will teach you later in the program, that when the whole world is talking about silver, when you see it on television, when you see it on the cover of magazines, consider selling some of your position. Buying low and selling high requires that you do both.
We know these markets are cyclical and it doesn't make sense to not take your earnings off the table by selling. You know what I preach, that you make your money when you buy and not when you sell. And the way you cash it in is by selling. Never forget, you will never go broke making a profit. Love everything about your metals, but don't fall in love with them, as they are a tool to make your life and the lives of your loved ones better. They are an instrument to be used. Related to this are mistakes 6 and 7, which are number 6, expecting too much, and number 7, following narratives, not data. I simply can't say this enough. You have to resist the temptation to listen to these talking heads and hype men that are throwing out ridiculous price projections. These numbers set you up to fall in love with the idea or the potential of silver going to 1,000 and gold going to 10,000. And the result is it makes you stop looking at fundamentals and using your understanding of the market conditions. And instead, you start looking at price and not value, which will make you more likely to continue holding on and hoping and waiting for a certain price target. And then what happens? You end up taking that round trip Rick Rule talks about, where you never sell and end up watching prices return to where they started. Remember that Rick Rule clip? Buying low and selling high requires you to sell when it's high. On top of that, let's look at the price history of silver, for example, and how silver has performed, its average price. And tell me, what about that chart makes you believe that $1,000 silver is a realistic number? Thanks again to Jeffrey Christian and his group. He put this chart together of $30,000 gold and $3,000 silver, which are numbers we've heard. And look at what this looks like at scale. You can't tell me that we should ignore the previous 60 years of price action and think all of a sudden these metals are going to more than 10 or 20x. It just doesn't make sense. Think about this. In a previous video, I showed you the graphic of the number of ounces in gold and in silver needed to buy a Corvette in 1971 versus 2020. So let's play this out and test that logic. So with $10,000 gold, that would either mean you could buy a Corvette for 6 ounces of gold, which in 2020, it would have taken you 58 ounces of gold, or that Corvette would have to cost $400,000 just to have a ratio of 40 ounces of gold compared to 58 ounces 3 years ago. It just doesn't make any logical sense. The numbers don't make sense. Check out on the screen this chart of an anatomy bubble. I've shown this to you so many times. And this is important because all markets will give you a signal as to the time that you should exit. Or as Rick Rule said, when your investment makes the front page of the news and magazine publication, when it's the only thing people can talk about and the euphoria has people saying that it could go on forever, that is likely the time to exit and take profits. And that has little to do with price or price predictions. These narratives are a form of psychological warfare used by promoters who want to sell you something or want you to watch their senseless videos so they can make 2 cents per view. These narratives and their promises are intended to pull you in emotionally and play on your fear and your greed, especially greed. The greed that these prices are going to go and do moonshots and make you rich. The danger is these narratives have the ability to engage us intellectually, emotionally, and socially, making them very powerful and enduring. Don't make this mistake or any of the other ones mentioned in this video. In the comments section, which of these stacking mistakes have you made? Or you can share one of your stacking mistakes or mistakes you've seen other people make, or you can simply put an A+ in the comment section so everyone knows that you always stack smarter and never stop learning.